Hello folks, in honor of me making $16,000 day trading the S&P 500 this morning and it being Black History Month, I would like to start today's video off with a tribute.
MC get him backpack, little nigga back, fuck where that ass at, bitch where that cash at, when I really smoking little dope, we don't match that, and these other niggas slide through, bitch clap that, house lick, we running through that bitch like it's fast track, I remember all them days I was broke, but I'm past that, get the job done when I'm bustin', I don't backtrack, hit his black with some chops out like it's back there, shoot a like Mad Max, leave a nigga stretch out, all headshots dumb, nigga, put that vest down, nigga pussy up like a young nigga fresh out.
All right. Everybody lock in. Happy Black History Month. I'm sorry that I didn't announce it sooner, but this is how I made $16,000 day trading the S&P ski. All right. Coming into today, we had a couple things. We had a couple draws on liquidity. Okay, we had these London session highs. I marked out these just for take profits, but we had these London session highs, we had London session lows, Asian session lows, along with Asian session highs all the way up here. A lot of people are saying, how did you find your buys for the day? This made no sense. To me, it didn't make sense either, but I still took the trade and I still won the trade. That's the end. No, I'm playing. Okay, look. A lot of people... I started off the stream. This is the second time that this has happened back to back. And it's just unfortunate that today, my bias is bearish. I wanted us to sweep out London session highs and then rotate on down to take out all of these lows because I'm like, look, we have all of these London session lows down here, or London session lows and Asian session lows, and there's really not much for us to grab up here. And on top of that, on the high time frame, I was like, look, we filled in this new week opening gap that's probably going to act as an imbalance for us to want to retrace on down and continue this downtrend that we're in. So at the start of the day, I was bearish, but then once market opened and we broke 5-minute structure to the upside, after getting this hourly retrace to the downside, filling in this hourly breaker right here. Okay, we filled the hourly breaker. If you want to consider this an order block, maybe you could. Me personally, I don't consider those order blocks. But we came down, we filled this hourly breaker, and then off of that hourly breaker, we broke 5-minute structure to the upside. Again, I've said this in multiple videos before. My bias will and has to change based on 5-minute order flow. So even if my bias is bearish, if 5-minute order flow, if 5-minute bullish order flow is getting respected to the upside consistently, that is undeniable reason for me to look for longs. I cannot go against what 5-minute order flow is saying. Same thing here on NASDAQ. We see, boom, right when market opens, we break 5-minute structure. And from there, it's okay, yes, did I want shorts? Yeah. Did we come up and did we sweep out these London session highs? Yes, we did. But did 5-minute order flow give us any sort of reaction off of this? No, we didn't. Same thing here on ES. When we came up and took out these London session highs, did we get any reaction out of it? No, we didn't. So in turn, I'm going to look for longs. Okay, so what caused me to look for longs today and why was I able to take longs right within here? Well, it was pretty simple, actually. We had that 1 hour retrace into the hourly breaker right here. Okay, once we got into the hourly breaker, we got a 5-minute breaker structure. From there, if we're in bullish 5-minute order flow, really all that I'm looking for after that is just some sort of continuation confluence, whether that be a bullish for value gap, whether that be equilibrium, whether that be a breaker block, whether that be an order block, and we had multiple ones. We had this equilibrium that ended up getting hit on this black candle to the downside right here. We also had this breaker block, boom, right here getting hit. And then if you want to consider these two black candles order blocks, you can. I don't really consider them order blocks, but we do have this 1-minute order block right here, which ended up getting hit as well. And then following that, okay, cool. We get a 5-minute breaker structure to the upside. We get a 5-minute retrace. What am I looking for? Either a 1-minute inverse fair value gap or a 1-minute breakup structure to the upside. We get a 1 minute breaker structure to the upside on this candlestick. Bet I'm in. My stops are underneath these lows. My first take profit was a pretty shit risk to reward ratio, but I only took off a fourth or 25% of my position at these highs, which was a 120.8 risk to reward ratio. And then the rest of my take profits were hit, and the final risk to reward was a 1-to-4 risk to reward ratio that ended up helping me make a significant amount of money. So we hit first take profit, second take profit. The second take profit was just based off of these equal highs right here. I could just see it directly on the hourly time frame, so I marked that out. This blue line right here was equilibrium from these highs down to these. Sorry, not equilibrium. It was OTE from these highs down to these lows, the 62% extension. And then final take profit was just the start of this 1 hour fair value gap right here. And that was pretty much it. Like, following all of that, we hit first take profit, second take profit, third take profit, fourth take profit, and I was able to hit every single one of them. This was pretty simple. If you guys were on the live stream where I stream every single morning showing you guys all these entries and all these exits, obviously, like, I'm not going to give you guys signals if that's what you guys are asking for, but I do show you guys every single confluence that I'm looking at prior to taking a trade. And I live stream this every single morning at 9 a.m. Eastern time. There's a link underneath there for you guys to follow me, turn on notifications on Kick. And also, if you guys want to learn more about all these confluences and learn my strategy and directly be my student and get mentored by me, you guys can apply to join the mentorship. There's going to be a link in the description down there. Because I know my YouTube videos are kind of scattered sometimes, and some of you guys may be watching these videos and you're like, what the fuck, how was I supposed to take this trade? Well, I try and do the best that I can on these YouTube videos, but if your brain is scattered like all my YouTube videos are, then it's going to be a little bit confusing for you. On NASDAQ, there wasn't really much of a trade here for me because on ES, we actually got that 5-minute retrace into the breaker block, into equilibrium, and all of those 5-minute and all of those 5-minute continuation confluences versus NASDAQ. Like, we were already above not hourly highs. Well, yes, hourly highs, but London session highs before the macro. And that was also another reason why I wanted to go long on ES, because we came up and we made equal highs on this candlestick right here. And then when we came up, made equal highs and then broke structure, I was like, okay, this is literally free bread. We have 1 equal high, 2 equal high, now 3 equal highs, and we just closed down here. This is 1 trillion% going to get taken out. Not only is it a key level being London session highs, but we have equal high, and now equal high, and we just closed right here. This is 1 billion% going to come up and get taken out. So for me, I was like, okay, bare minimum, I get like a shitty risk to reward, but at least I get some profit for the day. And that's exactly what I got. And bare minimum ended up turning into max reward because, again, I stuck to 5-minute order flow. If we see 5-minute break structure and then maintain bullish order flow, you can't go against that shit. Even if our initial bias was like, yeah, we want to see a London session high get swept and then boom, rotation to the downside, like, yeah, we can say that's what we want, but if price tells us something different, we can't just get married to our short bias. I was telling this to my mentorship students a couple days ago, where I was saying, yes, a lot of times I'll come into the day saying, I really want these London session lows to get taken out, or I really want these Asian session lows to get taken out. And guess what? The market doesn't care what we want. The market's going to do what it wants to do regardless. It's up to us to react to the market. We are making decisions based on what the market gives us, not based on what we want as traders. That's how you end up losing trades. Because if I say, oh, well, we just swept out these London session highs, and at 8:30 when I got on the charts, I really wanted us to sweep out these London session highs, then get a rotation to the downside to take out these London session lows. But we have to understand, like, okay, the macro, it like literally already hit and we're still maintaining 5-minute bullish structure. That bias is probably washed by now. If we were previously in bearish structure and then by the time the macro hits, we've already reversed 5-minute structure, what are the odds that we're going to come up, sweep out these highs, and then get some sort of reversal to the downside for us to then come down? Like, there's just not enough time for that. You guys have to understand how the market moves. If the market is in bearish structure And then right when market opens, we break market structure to the upside, and then we get a continuation confluence to maintain bullish market structure to the upside, literally confirming like relatively higher time frame order flow. Why the fuck would we be looking for shorts when the macro hits? The macro gets hit, and boom, we come up and we end up taking out London session highs. Like, yeah, obviously, because we broke 5-minute structure and then we maintained bullish structure as price was going through. Versus if we had come up and taken out these London session highs right when market opened, that would be a different story. If we came up and we swept out these London session highs, then started rotating down, and we had a potential setup to see bullish order flow get invalidated by the time that the macro is coming in opening, then cool, yeah, then I can look for shorts. But this was just too fucking obvious that price wanted to go higher. So a lot of you guys need to take that into account when you guys are looking to place trades and when you guys are formulating your bias. Again, I've said this multiple times in multiple trade recaps. You guys need to stop marrying your bias. Okay, if you guys can stop marrying your bias, then, and if you guys just react based off what the market gives you, you guys will be much better off, and you guys will be able to start taking better trades, and you guys will be able to start taking more trades, and just win a lot more by just going purely based off what the market gives you instead of what you want to happen. So with that being said, hopefully you guys learned one thing or two. I appreciate you guys. I'll catch you guys in the next one. Peace out.